A very good afternoon. Thanks very much, Mfundo. Asian markets were mixed, with some being cheered by an expectation that the Fed might cut rates further this month. The next big data market players will be looking to consume are the US non-farm payroll numbers coming out on Friday. This after a negative report last month. China and Hong Kong stocks ended in the red. It said some investors decided to take some profit off the table following a good run that was driven by tech stocks. The Nikkei share average rose by 0.33%. The Hang Seng Index declined by 0.5%, while the Shanghai Composite Index ended the session down 0.45%. Looking at the local indicators, we see that the all-share index is down 0.5% at 101,344 index points. The rand is trading at 17.73 against the US dollar, 20.62 vis-a-vis the euro, and 23.73 against the British pound. Gold is trading at $3,379 an ounce, platinum at $1,390 an ounce, while Brent crude oil is trading just shy of $70 a barrel. And the reason why we haven't mentioned the US markets is that they were closed yesterday due to a holiday. Let's get into it now with Makwe Masilela. He's Chief Investment Officer at Makwe Fund Managers. Thanks very much for joining us, Makwe. So US markets were closed for holiday yesterday, and they usually serve to give other markets some direction. So what's your reading of things today, and what do US futures indicate around how the US markets will open?
Indications are they will open in the negative, and we are already, just like Europe, trading in the negative, and all because of concerns, about government finances, and also this issue about the lingering inflation. There's a high risk to that. But the truth be told, jobs numbers continue to be the most important factor that the Fed looks at, and any economy, they have to be worried that they create the necessary jobs. As you said, intro, come Friday, we'll be looking at those numbers, but already there's some talks that this is cooling, and hence you see people expecting a rate cut come September, and that's what has been keeping markets at elevated levels, because markets have been expecting some rate cut come the 17th or so of September from the US.
We wait and see. So no doubt it's positive news for market players here at home that National Treasury and the Reserve Bank issued a joint statement yesterday indicating that an inflation target policy stance would be communicated as soon as possible, because that feeling of them not being united a couple of months ago on the subject was quite problematic.
It was, and given that the Reserve Bank is reporting to the National Treasury, but I think maybe we just have to give them a benefit of the doubt that before they were talking together, but you remember the National Treasury, they were caught up with this whole issue about the budget, so probably they lose the focus. So now we'll say they've managed to catch up, and here we are. We expect them to make an announcement, but already we have some indication, as was said from the last meeting with the Reserve Bank, that what will be their preferred target, and here we are talking plus minus 3%.
Gold, it hit through $3,500, more than that, I think $3,554. What does this say for the likes of stocks and bonds?
It says that gold, it was looking at the bet that interest rates will go down, and the gold price, as we know, people tend to use that as a hedge for so many things, and people being worried about the markets themselves, that they are at elevated levels and still waiting for earnings to justify those levels. We'll continue to nibble on that, but we've seen that they've managed to profit taking to kick into the whole thing. But why interest rates linked to gold is because gold itself doesn't yield anything, and in an environment where interest rates tend to go down, then the opportunity cost of holding gold tends to be less.
So ShopRite came out with their annual results. The 52 weeks ended the 29th of June. Very good numbers. These guys, they continue to surpass expectations. Your quick thoughts on them?
Open to 281 more store sales up, and because they're positioned in the right market, and also they are 60-60 doing okay so far, I think it's also capturing almost 10% of their sales. So I think their positioning serves them well, and they continue to get the right market share.
All right, Makwe, thank you so much for your time. As always, that was Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. We're going to take a quick break.